Good afternoon, everybody. This is Andy Pedraza with Special Effects Academy on our start of the week session for the week starting July 22nd of 2018. The Forex Weekly Outlook, we're going to take a look at the week that just ended as well as the week ahead. This session is being pre-recorded, and I apologize for that, but I have a conflict today. So I'm not going to be around at our normal 6 p.m. session. Other than that, business as usual. So we'll go through our standard agenda, looking at the prior week, our currency strength meter, the fundamental announcements, major pairs, setups in progress, and a few parting words. If anybody does have any questions or comments to make, please send them to me by email. trader@specialeffectsacademy.com. I'll be happy to take those, or I can answer any questions on our next session tomorrow. That's going to be it for the contents. So we'll just jump in. The prior week, we're looking at the long-term account here. We only opened 3 trades on the long-term account this week, and they are the ones highlighted in red at the bottom of the ledger. Long on the USD JPY and Euro JPY, and short on the pound dollar. All of them were open at the same time on July 18th around noon my time. The Euro JPY went against us, and I closed that trade out pretty quickly. The USD JPY all but made up for it, and the pound dollar did give us in excess of 60 pips of profit. I know the long-term account is supposed to be long-term, as its name implies, but we saw some quick opportunities to trade this account at the higher lot sizes we normally do to maximize our profit. Year to date, and our year starts in April, let's not forget it's the fiscal year. Year to date, we have grown this account 38.32%. We do have one open trade right now, the Euro Pound, and it is in excess of 100 pips right now, close to 200 pips of profit. That Euro Pound trade that was opened back in May. So that will only add to this account balance, as some of that profit is already protected as well. So that's the long-term account. Again, you have access to this ledger via the link that is in all of our update emails throughout the week. So take advantage of it. If you need to review anything, it's there for you. Let's move on to the short-term ledger, which is just the week that just ended. We did open 20 trades for the week, and of those, we won 13, lost 7, a win ratio of 65%. The net profit on the account, almost $160. Profit in pips was an adjusted 70 pips. We did trade different lot sizes, and I always adjust to a standard, assuming we're always trading too many lots. So adjusted pip win was 70.3 pips for a growth of 3.20%. We started out, I guess I'm going to cover that in the next slide, so give me 1 second to jump ahead. So the opportunities for improvement. On the long-term account, we saw a very few opportunities that we capitalized on at the higher position size, as I mentioned before, for a bit over 50 pips of quick profit. The short-term account, we started off very well for the week, but we did have a reversal of fortune towards the end. Actually, Friday was where Thursday into Friday was where most of the reversal happened. The dollar did have a crash around then. We still ended the week at a nice over 3% profit, but it could have ended much higher. That said, risk-taking is exactly what we as traders do. If we don't risk, we don't gain. So every now and then, we will be playing these risks as sensibly as we can and following good trading practices, but there will be some of these temporary losses along the way. So this is just a normal part of trading, and if you're not accustomed to it, you should. There's no way to get around that or avoid it. If you're going to be trading every now and then, you're going to be losing. And if you don't take these risks, you will not expose yourself and your account to the higher wins that are possible. So in essence, we didn't see any opportunities for improvement. We played the week for what it gave. It was a good week on both accounts. And that's about all I can say in that regard. Trades remaining open on the short-term account, none. We closed every single trade out on Friday afternoon right before the market closed. If you do have the copy trader, then you would already know this since all these trades were on our copy trader and going out live to all our subscribers. So you would have been in the same trades we were in, and they would have closed out at the same time we closed out ours. Moving on then to the relative strength meter, we're comparing the movement of currencies last week as well as the week prior. So on the week prior, well, I'm not going to dwell on the week prior. I just have it there for comparison. But this week that just ended, we had the Aussie take somewhat of a hit against everybody except the pound. We had the Canadian in a mixed bag. It lost ground against some, gained against others. The Swiss franc was the overall winner of the week. It appreciated against everybody else. The euro was also a bit of a mixed bag. It depreciated against the Swiss, the yen, and the New Zealand, and it did gain ground on the CAD, the dollar, the Aussie, and the pound. The pound had the worst week it's had in quite a while, and it's pretty much going on and still ongoing. So I wouldn't expect much recovery out of the pound given their political situation. But it did lose ground against every other currency out there. The yen gained against everybody except the Swiss. The New Zealand gained against everybody except the Swiss and the yen. The dollar had also a mixed bag. It gained ground against the Aussie and the pound. I mean, who didn't gain against the pound this week? And the dollar also lost ground against the Swiss, the yen, the New Zealand, the euro, and the Canadian. So not a good week for the dollar, and the last couple of days in particular were brutal for the dollar. Looking at the bullion at silver and gold, silver had a terrible week. It depreciated and strongly against pretty much everybody else. And gold didn't fare much better. It depreciated against everyone except for silver. And that is the end of our relative strength meter. We shall move on to fundamental announcements for this week that is just beginning. Not a whole lot there. There is one important announcement coming out Thursday at 7:45 a.m. Eastern Daylight Time. We will be trading this one live. That is the interest rate decision out of the European Central Bank. Again, 7:45 a.m. on Thursday, July 26th of 2018. The trading room will be open a half hour earlier. At 7:15 a.m., we will have the trading room open to trade this decision live. They will also have a policy statement and a press conference at 8:30 a.m., so likely we'll be staying online throughout just to trade anything that comes out of the actual decision, as well as the following statement and press conference. All the other fundamental announcements are what I would consider reasonably minor, even though they're labeled high impact. We have the CPI coming out of Australia, and we have CPI coming out of Japan, and we have CPC as well as GDP coming out of the US. The GDP may be a good fundamental to trade on Friday at 8:30 a.m. I will make a decision later in the week if we want to trade that one live in the Forex trading room. For now, not really planning on it. Definite one on the agenda will be Thursday's European Central Bank interest rate decision. Okay, that is it for the announcements. Again, if you ever want to see what's on the calendar, not just the high impact that I cover here, but the medium and low, please go to our website, specialeffectsacademy.com. You will see the link there for the fundamental announcements, or if you want to remember the whole thing, then specialeffectsacademy.com/fundamental-announcements will take you directly to that page. You can then tell it what you want to see, low, medium, high, all of them, and you can also pick what currencies, what dates, and anything else you want to take a look at. Moving on now, we start looking at our daily charts for the major pairs, and as usual, we're going to start out with the euro dollar. I'm going to wait a second here for the screen. There it goes. Screen caught up, and you're now seeing the euro dollar on your screen. We can see that it has been in a sideways pattern since around the second or third week of May. It's just been moving sideways, has refused to go much higher, has refused to go much lower. So we're waiting for a breakout of that pattern. I still believe that the euro is in for rough seas ahead. So I'll likely be looking for opportunities to trade it down. But again, we're not in the predicting business. I'll just as easily take a long on the euro dollar if that's what the signals tell me to do. But my gut feeling is that we still have more room towards the bottom for it to move. Moving on to the pound dollar, we see a little bit of the same in that it has had some significant sideways action in the last few weeks, but you can still see that downward trend playing out. It isn't absolutely sideways. In fact, it's made a lower low quite recently, and that was the signal that we took on the long-term account to enter short on the pound dollar, and we took a quick 60-something pips on that drop and got off on the retrace, which in retrospect looks brilliant, of course. But that's simply how we keep the account safe. If we see a move happening and we've already got profit lined up, we do take that profit off the table. No sense in letting the market turn against us. So we took the trade towards the bottom, and we got out way before that move up happened. So we'll see what the new week brings. If we continue seeing that recovery from the pound against the dollar, or as I suspect, it's going to go in the opposite direction and continue heading down. Moving on to the USD/JPY, we see that on the daily, it is following a nice uptrend. It had gone far away from the trend line, and at the end of the week, with the reversal on the dollar's fortunes there, it did retrace and is very close to the trend line yet again. We're going to be waiting to see what the new week brings us once the market opens. Market is still closed and will be closed for quite a few hours yet. It is barely 1 p.m. my time as I record this. But I would expect this to be short-lived, and the USD/JPY, as well as the other pairs, to head back into dollar strength. Again, I'm not going to predict that. I'm not going to be trading on it. I'm going to be waiting to see what the actual currency market does, and then acting accordingly. But my suspicion is that there is still room towards the top for it to go. Moving on to the USD CAD, we see more of the same. We see that moving into dollar strength, a nice trend line going up that broke late in the week. So Friday we had that very long candle going into dollar weakness, Canadian strength. And again, I would expect this to reverse and continue heading up, but we'll see what the market does when it opens. Moving on to our friend, the USD Swiss, more of the same, a nice little uptrend. What we will note in the USD Swiss, however, is that it is very, very close to its historic stopping point at parity, $1 to 1 Swiss franc. So it has bounced around that area for quite a few weeks now. And I would expect at some point for this to break towards the bottom. So I am expecting Swiss strength to return to the market. However, it will do it in its own sweet time. So I'll wait to see the move begin, and then I will trade that as far towards the bottom as it allows me to. Again, my gut feeling, based on again what I'm feeling, what I'm seeing in the market, as well as the fundamentals. That parity area 1-to-1 is about as high as it gets, accepting very strange geopolitical occurrences or financial upsets with either economy. Moving on to the Aussie dollar. Couldn't be worse, the Aussie dollar these days. It had its high back in January, and since then it's just been going down, and looking like it has no bottom. It recently did a test of the previous low, which failed again on Friday when the dollar took a hit. So now we see that long candle heading up, and we'll have to see what the new week brings, but I would not expect strength from the Australian just yet. Kiwi dollar, it's going to be looking the same as the Australian chart. They are very much tied at the hip, and it is going down into dollar strength. Same candle on Friday when the market reversed, and we're waiting to see what the new week brings us. Aussie Canadian, the Aussie, as I said, hasn't had the best year. Actually, I don't recall when it had a worst year. The Canadian, of course, has had its own issues, which is why we see the Aussie recovering against the Canadian for a while before the bottom fell out again, and it is now heading back towards the prior low. If it indeed heads all the way down, we have about 200 pips of opportunity, which I would dearly love to take. So I'm going to be taking a look at the both the Aussie and the Canadian, and especially this cross in the coming weeks to see what we can pick up from it. Euro Swiss, the Swiss, as I mentioned before, has had a rough patch against every other currency. It has definitely been slower heading into that Swiss weakness with the euro than with other currencies, simply because the euro has also had a rough time. But regardless of that, it is in an uptrend. And again, I expect the Swiss to have a recovery eventually and not in the too far future. So I'm waiting for the break of that trend line on the daily, on any time frame, in order to trade this one back towards the bottom. If it does give us a nice trip towards the bottom, this is another one where we have in excess of 200 pips to harvest. So keeping an eye on this one as well. Euro pound has finally had a significant breakout from the sideways pattern it's been trapped in for quite a while. And this is all a result of the UK political dissent and unrest. We're already in this trade in the long term. As I mentioned before, this is our one open trade on the long-term account and carrying more than 100, close to 200 pips of profit right now. So nothing much more to be said about that. I'm still keeping that trade open, still trading it up as far as it wants to go. But at this time, I have already locked in profit. If you see, I bought it down here at the 88.15, currently trading at, well, when the market closed, it was above 89, so a bit more than 100 pips, not really close to 200, but certainly more than 100. And I've got about 15 pips of that protected, 50 pips of that protected as we speak. So I'm giving it that room in case it wants to continue going up. If it does reverse all the way there, take the 50 pips and that'll be that. But for now, this trade, even though it took quite a while for it to fulfill, is finally moving in our direction. And again, it's the one open trade right now on the long-term accounts. Euro JPY, not much to see here. The Euro and the JPY have both had their issues, so we see a lot of sideways action at the same time as it's slowly dropping towards the bottom of the chart. Very shallow, but still dropping and this is the yen, even though weakening, is still getting stronger than the euro. The euro Canadian, another weird looking pair going in both directions. It definitely was going into euro strength, Canadian weakness for quite a while, and is still doing so today. But the European issues caused it to have a massive reversal, which only broke towards the end of May, after which it has been trending back up. Not sure what the outlook is. I would expect one of these two to lose the weakness quicker than the other, and that will give us a nice arbitrage opportunity here as we play the different currencies against each other, especially if we can get into multiple euro and multiple CAD trades, where we know that some of them will be losers, but the winners will far outpace the losers, and that's what makes us money as traders. Pound JPY. Nothing much to be said here either. The pound is failing across the board, and the JPY is picking the profits off of that. Even though the JPY is also having issues, it's having less issues than the pound and is getting accordingly stronger. Aussie JPY. In this case, they are evenly matched. The Aussie and the JPY have both been having issues, and they seem to have been having issues at about the same rate. So we see that we have a lot of sideways action bouncing between the 80.50 and 84.50. So it's got about a 400 pip range between which it has been bouncing since late January. So, again, another one where I would love to see a breakout and trade it, but doesn't seem to be happening anytime soon. Euro New Zealand, more of the same. We see the Euro and the New Zealand both having issues, and that makes it a very sideways pair. A bit of a wide range as well. We have about 600 pips of range in that channel, and it just does take a long time to bounce from top to bottom. Half the time. So we'll see if we can get along, get in on one of these bounces and take some of that money out of the market, but it's not the easiest pair to trade. So I'll look for a good opportunity, but I'm not holding my breath. Pound Canadian. No news here. The pound has been weakening, so has the CAD, but the pound has weakened far faster, and that has made this pair do a nice retrace back to the middle of the chart. Still has room to go towards the bottom, but it is a very dodgy pair since both currencies are weakening right now. It's a matter of which one is going to weaken faster than the other. We can see that the past couple of months from late April through today have been very sideways, so it has not broken out in either direction in quite a while. That does bring us to the end of our charts to review, and we have the setups in progress, or the way I see them, for the week of July 22nd. The dollar has finally suffered a reversal, and that happened towards the end of last week. Keep a close eye on it. Watch to see if that reversal holds. I do not think it will, but if it does, I'll trade it in that direction. But right now I'm waiting to see what the new week brings us. The euro pairs, the euro is bouncing, and opportunities will be had if we pair it with the right currencies. So it's a matter of not pairing weak to weak or strong to strong, and making the most advantage of having a weak currency against a stronger one. So we'll keep an eye on that. The pound pairs, the pound just can't catch a break. This is probably going to be another upset week for the pound. And as I said, I do believe that is the case, but I will wait for confirmation. The Swiss, I already mentioned this in one or several of the Swiss charts. It's near its historical limit when it comes to weakness, that area of parity with the dollar. I'm expecting a reversal into Swiss strength soon. What soon means is something I can't tell you guys. It's, less than a year. So the key takeaway is that I do expect it to go into Swiss strength, but that doesn't mean it's going to happen this week. We just have to be ready when it does. The Canadian pairs, they will provide interesting trading as they pair off against weaker and stronger currencies, what I was mentioning at the end of the last chart. In particular, you're going to find that there are good hedge trades via arbitrage. What does that mean? That we're taking multiple trades on the same currency against different currencies and perhaps even in different directions. And what we're looking for is one to move more than the other. That's pretty much the definition of a hedge. And arbitrage, because we are playing at least three currencies against each other, one of them, which will be the CAD, being the common link between the other two. So, for example, we may trade the Euro CAD and the Aussie CAD. The common theme there will be the CAD, but we're playing with the Euro and the Aussie, which might go in different directions. So a little bit of a more complex strategy, and we'll get to that in the trading room if and when I see a good opportunity. So be tuned in for that. And last but not least, my parting words here, it's still going to be a week of political unrest. There's too many things going on. Trump with the Russians, Trump with the trade wars, Trump with everybody else on the planet. So a lot of news coming out of the U.S., out of the UK. They've got pretty much a rebellion happening in the House of Commons and the House of Lords. May's government may end at any time. If Labour gets in, it's going to be horrifying for businesses. That doesn't mean it's going to be a bad thing. I'm not taking a political side here. I mean it literally. Businesses will be horrified. When businesses are horrified, money starts fleeing. That is what you will see. I'm not going to say whether Jeremy Corbyn being prime minister is good or bad for the UK. Not my business to say so. I'm not a UK citizen. But what I do know is that businesses will be very, very frightened at the prospect. And that means that the market is not going to go in the direction of the pound until all that gets resolved. And many other things happening around the world. So that is going to drive trading. It's going to be driven by the news cycle, which is a fundamental trader's dream. Forget the charts, pay attention to the news. If something drops further than you think it should have dropped, play the reversal. If you think something's going to happen based on the news, then play that, yada, yada, yada. So we will be trying to take advantage of that in the coming weeks. That doesn't mean we're going to ignore our technical trading. We still will, but it will be heavily influenced by what's happening in the news cycle. The trick here is going to be to take as many pips as we safely can every time the market serves them up on a platter. The signals, the technicals, they may be dodgy while this is ongoing, but they will never be absolutely useless. We'll still be using them. And at the end, equity management is going to be your friend. If you make sure that when you lose, you don't lose too much, and that when you win more than enough to make up for that, then your account will always be growing. If your account is growing, you have no problems. Even if it's growing slowly, you still have no problems. And if it's growing at a nice clip, then you have even less problems, I guess is the final message here. So that's it. Of course, we do have our Q&A, but it's just me right now. This is being pre-recorded, so I apologize for that. If you do have any questions for me, do feel free to email me or reach out any other way. All of you know how to get a hold of me. For those of you that may be listening to this on YouTube and don't know us, you may reach me at Trader, Trader, at SFXAcademy.com. And I look forward to hearing from you guys. Thank you so much. That's a wrap, and I will see you in tomorrow's trading room. Take care.